Hello guys. So this is a PM session silver bullet review. So I did not take any trades, but this is just hindsight. So we can see this is a bearish order block. So at 1:30 p.m. price went into this bearish order block and we had a rejection here. So let me mark the silver bullet 1:50 p.m. to 2:10. This is the 1-minute chart and this is the 15-second chart. So once we enter our macro window, then we have this bearish fair value gap and we had a rejection. We had a shift in market structure here on a 15-second chart. And this is the bearish fair value gap. So we could have gone short on this fair value gap. And our stop loss would have been 50%. Where is this? Short here. Oh, yeah. So our stop loss would be 50% of this bearish order block. Sorry, these consecutive two up close candles. So 50% of that bearish order block, and our take profit would be in this fair value gap. Just into this fair value gap. So into this fair value gap. Yeah. So this would have been our first trade, and we had this one more manipulation into this consecutive up close candles order block, and price closed again below the swing low with a fair value gap. So we could have gone one more short here. We could have pyramided. We could have pyramided our position here, and our stop loss would have been above this candle, and our take profit would have been same again into this fair value gap. So this could have been our pyramid trade or one more trade. So once we are into this bullish fair value gap, we can see this as a market maker buy model, consolidation and expansion. Here market took the liquidity below, price went below this body of this candle, so still market has taken the liquidity and it is reversing. So we can clearly see that in this two up close candles, in this consecutive two up close candles, market makers went short. So now they are again, they distributed here in these two up close candles. Now they are accumulating or mitigating their positions, and they are accumulating their longs here. So we can so at the same time, this is the 5-minute bearish fair value gap. Here we have 5-minute bearish fair value gap. So they distributed here, so they are accumulating here. So price came into this fair value gap. Now we wait for shift in market structure. So once price went into this fair value gap, we have a rejection. At the same time, you can see price has taken the liquidity below these two time ranges. This is 130 to 2 and 2 to 230. You can see this zone and this time ranges, lows were never taken out. So once price takes out this low of these two time ranges, at the same time this fair value gap, and we wait for a shift in market structure. So this is the swing high. This swing high was taken out here. And on a this is a 15-second chart. On a 15-second chart, you can see this 130 fair value gap. This is on a 15-second chart. This is 130 fair value gap. This is first presentation after 1:30 p.m. This is the first presentation after 1:30 p.m. This is on a 1-minute chart. This is on a 15-second chart. You can see after closing above this swing high, price came back into this first presentation after 1:30 p.m. and price never closed below the 50% of this fair value gap. So that is our confirmation. So once this candle, once we have this candle, we have a swing low confirmation here. On the next candle, on the second green candle, we could have gone long. And where is the liquidity? And this is this half an hour, above this half an hour and above this half an hour, we have two swing highs. So this liquidity is intact. So we could have gone long. We could have gone long on this candle, right? On this candle. And our stop loss would be 50% of this order block. 50% of this order block, and our take profit would be above this swing high and this swing high. So this could have been a nice scalp. So this is the silver bullet trade, guys. So we could have gone. So just to summarize, price went into this 15-minute bearish order block. So from 1:50 p.m. macro, we had a shift in market structure with a fair value gap. This is a confirmation. So we could have gone short and we could have exited into this bullish fair value gap. That was one more trade. And once price did this manipulation and again closed below this up close candle, we have a bearish order block. At the same time, we have a fair value gap here. So we could have pyramided our position or taken one more trade here. Again, the same thing, exit into this bullish fair value gap. So once that is done, so once price took this liquidity, this half an hour and this half an hour, this time ranges liquidity, and once price is inside this bullish fair value gap, you can clearly see on a 5-minute chart that the market makers distributed in these up close candles. They went short here, so they want to mitigate their positions and go long here. So you can just draw this extend here. So price came back again into this, so they are adding their longs here. So we want to see momentum and energy and give confirmation about the shift in market structure. So this swing high was breached by this candle on a 15-second chart. These two up close candles closed above this swing high. At the same time, we have this first presentation after 1:30 p.m. First fair value gap after 1:30 p.m., which is important. So we can see price never closed below the 50% of this fair value gap. So only wicks came down, but bodies never closed below this 50% of the fair value gap, which is a good sign. So once this happens, on the next candle we have a swing low confirmation. So on the second green candle, this candle, so once this candle closes, we have a swing low confirmation. So on the next candle, on this candle, we could have gone long, and we could have targeted all these swing highs, guys. Swing high, 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 swing high. At the same time, these two time ranges high, both are same. So to summarize, this was first trade, this was the second trade, and this was the third trade. So that's it, guys. This is review of the PM session silver bullet. Thank you.